Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is February 1st, 2018, and today is Thursday morning. So looking at the economic events of the day, just two events coming out, starting at 11:30 South African time, coming out of the UK manufacturing PMI number, and then at 5 p.m. South African time, ISM Manufacturing PMI number coming out of the United States. Now, these numbers in light of this week are really almost irrelevant, okay? But if there are any surprises, you do want to know that they're coming out today. So yesterday, FOMC. Tomorrow we have non-farm payroll. So we're in the middle of a storm of two major events of the week. So these events today may, we may be a little bit more quiet today as opposed to how we reacted yesterday in anticipation of tomorrow. But let's see what's been happening in the markets. So we're going to take a look at the Dow Jones in just a moment, but we're going to start out here with the Euro USD. We just tanked this morning. As you can see here, we're selling off from 124.12 to 123.91, about 20 pips we just sold off. But outside of that, okay, we had a little bit of a spike yesterday, as you can see here, just to highlight it right here, which is very, very typical of FOMC meetings. Almost irrelevant, okay? Because at the end of the day, we continue trading and sideways trading. So we may be accounted for so far in the Euro USD, meaning to say that we're trading within a range, okay? We've broken from our previous lows of 123-ish. We broke above the 122. 123-ish level, and we're now just finding ourselves in a new range. Now the upper range I would say is around 124.70-ish level, and the bottom range would be 123.86-ish level. So we're testing that right now. The next support level I would say was 123.48-ish level. So just keep an eye on this, as it will be choppy today. Okay, we may not get that big move that we're looking for. We may just get that tomorrow. But if we do, find ourselves in the lower part of the range, that may be a prelude to tomorrow's non-farm payroll. Okay, so that does happen. So keep an eye on that as that resolves itself. Now, the dollar getting stronger across the board. Looking at the GBP USD, we sold off a little bit and made some real estate back, and now we're just loitering at 141.71. So nothing really big. Nothing is really at a threshold. Nothing is really at a at a good breaking point. Everything is just like in middle ground. So and I think that this is an anticipation to tomorrow's number, because there were some inflation fears from the Fed, and I think that the rate change will have affected and will go into effect as the months progress. But looking at the dollar across the board, USDs are still strong, okay, at 11.88. Didn't hit 12, which may mean that once it challenges this 11.83, it may go even lower. Okay, so just keep a mind open to that if it does. But we look like we're setting ourselves up in a tighter range here. If we look at a daily chart, you could see that we've tested this 1184-ish level a couple of times, and as you can see, we're not breaking that much further lower. So with that said, looking at a 1 hour chart, just keep an eye on this. If we do challenge it again and we do break even lower, that could be a decent breakout. So looking at the Aussie USD, also getting weaker here and testing our support level. Okay, previous resistance at 79-ish level, 180-ish level. So we're getting closer to that. So that would be actually a pivot point to consider. Okay, we may hold this line and then bounce off of it. So keep an eye on that as well. Not much going on in the gold, so we're going to jump to the oil. Oil bounced a little bit nicely yesterday, almost $1 from 63.85 to 63.76. A decent breakout. Okay, so it's almost forming a head and shoulder pattern. Let's see if this fruites into the second shoulder. Okay, this would be the first shoulder, this would be the head, and this would be the second shoulder. So let's see if that actually does fruit. Maybe we'll get a little bit of a retracement. Otherwise, we could see this really bounce, okay, and maybe testing our highs again. So keep an eye on that as well. Now, jumping to the Dow Jones, okay, I just want to highlight yesterday's move, okay, just a little bit so that you can see it. And basically, we had this decent sell-off initially, okay, from the market reaction right here. All right, and that's what is indicative of what happens. Okay, we have this one extreme move in one direction, and we mentioned this actually as the trade of the week last week in the Euro USD, when the ECB came out with the rate decision, we had one move in one direction, we have a correctional move that came right afterwards. And this is exactly what happened here. Okay, if you look at it as a line chart, you'd see that it's a V pattern. And this is, an initial reaction to the market, an initial reaction to the FOMC's rate decision, and then a correctional move that comes right out of it. And I just want to highlight that in a, you could see it just faintly here, but it's a V reaction to the move. Okay, we have one extreme move on the downside and then a correctional move on the upside. And you could see it better in the bar chart here in the Japanese candlesticks. But ultimately, it's a correctional move. We're back to where we were before. And I'd like to see some momentum back on the upside, especially non-farm payroll comes in today. Remember, our target for the end of next year is 30,000, and we're trading at 26,600-ish level at our highs. We sold off to 26,100-ish level, and now we're just at 26,200-ish level. So, there's still room for it to go up. Okay, I'd like to see that confirmation. I'd like to see that it continues going up, just to confirm our future estimates that it's going to hit 30,000. So just keep an eye on that. So again, just to recap, really the market is in a transitional between these two major news. Okay, yesterday the FOMC, tomorrow the non-farm payroll. So as the dust settles, I think we'll have more clarity as to the direction of the market. But I think right now we're still reactionary to the market. So just keep it low until maybe tomorrow. Okay, and then we'll have either we'll retrace to a support level or resistance level, and we'll have a better direction there, or we'll have some sort of a breakout. So just keep an eye on it, especially at the Aussie USD, which seems to be the leading indicator against the dollar as things have progressed throughout the week. This is Fred Razak. I want to wish you guys a great trading day. Thank you.